Hello traders, welcome again to my channel. So you know how we do it here. We like to go straight to the point and why we are here, why you find yourself in this place. So the reason why you're on this channel is because you want to understand what it means to do a proper top-down analysis. Because you've heard about how those strategy can help you look out for high yield setups, low risks. So this is why you're here. So I'm going to give you two perfect examples about top-down analysis, how to go about it. We're going to use the Euro USD and we're going to look at our GBP AUD. So I'm going to start with Euro USD. So just listen carefully. Before you do a top-down analysis, one of the things you have to look out for is that you want to be sure that your market is trending, right? Not all the time, but it's good to find a trending market. Now, finding the trending market means you have to understand where the dominant trend is. You have to know the difference between the trending and the retracement, right? So, when you look at our chart here, you can see that this market is purely on an uptrend, right? It's pretty obvious. So, I'm going to be looking at it from here to here. You know, the previous trend. I'm going to give you examples on how can do a proper analysis. So let's begin. So I'm going to pick it from this point. This is the first. This is a swing low, right? And you can see that there was a market movement in the bullish direction. And when it got to start level right here, market started to fall. Price started to fall back. Now, the follow of this price, this is what you call retracement. It's called a retracement because it's going in the opposite direction, not the dominant trend, right? So this is what you do. At this moment, this is how you now do your top-down analysis. You know, let me just say this again. The idea of top-down analysis is that you're looking at the market from a higher time frame and you're looking out at taking opportunities or placing your trade at a lower time frame so you can reduce your risks and maximize your profits. So now, let us go. Let us continue further. You see the market coming down, right? Now, the question is, how low will the market go? This is where it's a kind of questions that you want to ask yourself. How low? Why didn't price stop here? Yeah, so this is what you're going to do. Why the market is retracing? You're going to use two MT5 tools on your chart. Of course, they are free. You're going to look at it, use it to spot, possible levels where price will get to, and it's going to be a stop out. Your price gets to this level, and the market is going to, continue in its regular direction. So I'm going to first bring out my Fibonacci tool, and I'll tell you why. I've talked about my Fibonacci tool. You can check my channel to see about Fibonacci, how to use it. So I'm going to draw my Fibonacci to the most recent high at that time, and you're going to see what happens. So as you can see that price stopped at the last retracement level, which is 61.8, and also when you use your horizontal line, you can use it to look for places of possible support levels, which at this moment you can see how you're looking out for support level that Alice. You can see here. You can see, right? So I'm going to map this out again for you so that you see the levels I'm talking about. Here is a level. You can call that the key level. Here you can see another one, and you can add this as well. See, this is why there's a possibility that price will stop right here. So you're getting it right? So this is why when trading, when your Fibonacci matches with this level, knowing that the market is on a dominant trend, the bullish dominant, you'll be looking out for your buy areas at this zone. So at the moment when price gets close to this level, your next question is, how do I place a trade, to reduce my risk and maximize my profit? I wouldn't advise that you wait for an engulfing candle before you place a buy, because at this point the market would have rallied for too long already. So you want to look out for lower levels, lower time frames where you can take opportunities. So at this moment, this is where you now look out for go for your 1 hour and way down to 15 minutes. Okay, you want to look out for the level where you can place a trade. Now when you go for those levels, this is where the top down analysis comes in. So you go to your 1 hour. Your 1 hour, you're looking out for your 1 hour. What you're looking out for, structure formation and breakout, so that you can place a trade, right? And our 1 hour at this moment doesn't look like it. Doesn't give us what we are looking for. And when we check on our 30 minutes, it still doesn't give us what we are looking for as well. You can see this; it's not pretty clear. But when we check our 15 minutes, we can find market consolidations. It's a consolidation zone right here, guys. It's a consolidation zone. Knowing that the market is already on the bullish dominant trend. So once you find these consolidations on that zone, the support zone that you saw previously in the higher time frame, you are looking out for breakouts of these consolidations. And the moment this breakout occurs, you place a buy, thereby reducing your risks and maximizing your profits. And on the 15 minutes, you can also find the other structures that can support your bullish market placement. When you use your trend line, you can use your trend line to spot breakouts, right? You can spot breakouts as well. So you see what I'm talking about. You see how they all tally together, breaking up from the horizontal line, zone, and the trend line there. There you go. That's where your buy starts. And if you decide to throw in an indicator there, it can also give you extra confirmation. So without wasting time, let us go to the next. Okay, I talked about GBPAUD. Okay, before I talk about let's go to GBPAUD. GBPAUD, you can see that the market is on a dominant bullish trend. So what are you looking out for again? Same thing. You're looking out for levels where you can find support. And if you look at this market, you can find a level right here. You can see more. There's one here. These are areas of where price had had a hard time breaking through. So at this level, this is when we're looking at where the price will have a possible support level. You can see it. So I'm going to add my Fibonacci to this just to give me a stronger support level. So I'm going to draw from my swing low to my swing high right here. And there you go. So when you switch over to your candlesticks, you see how price rested on 61.8 level. So this zone is a valid zone, is confirmed, right? So what do you do next? Target analysis. You go to your lower time frame, just like we did in Euro USD. You are looking out for structural pattern formations. Chart pattern, sometimes it's not always perfect. So that's why I always say structures instead of just say chart patterns. But the chart patterns you are looking out for might not appear, but structures are always form. You're going to find breakout of the structures on lower time frame. So when you go on 1 hour, let's see how our structures are on 1 hour. Not too bad, but no one can stop to go check the lower time frame. So let's check our 15 minutes and see. Whoa, you can see our 15 minutes. You can see a clean, you can see this zone here. Let me mark it out for you. This whole level. You can see this whole level. This is why when price broke through this level, you are good to go for a buy. And I'm going to add one more thing just before I forget. When you use your Ctrl Y on your charts, you're going to see that this price consolidation always spans most of the time, not all the time. bounce over the previous day to the next day, that's when you're expecting that, a bullish breakout is going to happen. Then you can as well, if you're aggressive, you can take your trade right below it, or you wait for the breakout to actually happen. Then you place your trade, thereby reducing your risk. So that's how to trade top-down analysis. It's something you have to look at over and over again to get used to it. It works all the time for trading. So if you have any question, you can leave those questions in the comment section. I'll be quick to answer. I'll see you in the next video.